Welcome to World Insight. Please subscribe and hit the bell icon for more breaking updates. Imagine waking up to find your biggest customer has suddenly locked its doors. For the American energy industry, this became reality when China, one of the world's largest energy consumers, abruptly cut off its purchases of American oil and natural gas. Heavy tariffs made U.S. energy too expensive, and Chinese buyers simply stopped buying. The result? U.S. energy companies were left scrambling, with tankers and contracts suddenly in limbo. For years, America had ramped up oil and LNG exports, with China as a key customer. That relationship was shattered overnight, as tariffs up to 25% rerouted global energy flows and left American suppliers stranded. This wasn't just a trade spat, it was a fundamental disruption, with oil producers in Texas and LNG terminals on the Gulf Coast suddenly cut off from their biggest market. The energy blockade was the climax of months of escalating trade tensions, with China making it clear energy would remain a battleground. The world's largest energy market was now closed to U.S. producers, forcing a reckoning across the industry. Wall Street investors, oil workers, and global markets all faced a new, uncertain future. This standoff didn't appear out of thin air. Its roots trace back to the Trump administration's aggressive tariffs on Chinese goods in early 2025. The goal: protect American industries and pressure China to change its economic policies. The White House believed tough tariffs would force Beijing to the negotiating table. But China didn't back down. It retaliated with its own tariffs targeting politically sensitive U.S. exports. This tit-for-tat escalation quickly spiraled, with each side raising the stakes. When the U.S. imposed tariffs in February, China responded strategically, hitting core American commodities, energy and agriculture. These sectors were chosen for maximum impact, knowing a sudden loss of market access would hurt deeply. The stage was set for a prolonged conflict, with both sides turning economic strengths into vulnerabilities. The energy blockade was a direct result of this cycle. America fired the first shot, but China's response was powerful and calculated. The trade war became a test of endurance, with global consequences. What began as a policy dispute quickly became a high-stakes economic battle. The world watched as the two largest economies locked horns, reshaping global trade. The fallout would be felt far beyond Washington and Beijing. China's response was swift and strategic: a great wall of tariffs around key U.S. exports. Tariffs of 20% on U.S. crude oil and 25% on LNG and coal made American energy uncompetitive overnight. Chinese importers canceled orders, and for months, not a single U.S. LNG shipment reached China. The financial blockade was total, closing a lucrative market and sending a clear message: China would use its buying power as a weapon. While China eased tariffs elsewhere, energy was deliberately excluded, signaling its importance as leverage. By targeting energy, China aimed to inflict economic pain and create political pressure in the U.S. At the same time, it demonstrated resilience, securing energy from other sources and reducing dependency on America. The tariffs weren't just retaliation, they were a long-term strategy to reshape trade relationships. China's message: it won't bow to U.S. pressure, even if it means short-term disruption. The energy sector became the central front in the economic war. American producers were forced to find new buyers, often at lower prices. China's move showed it was prepared for a drawn-out fight. The global energy map was being redrawn in real time. The world took note. China was willing to endure pain to win the long game. The impact of China's tariffs hit the American heartland hard. U.S. oil companies, after investing billions in infrastructure, suddenly faced a surplus with no buyers. Prices became volatile, and uncertainty gripped an industry employing hundreds of thousands. Farmers were hit just as hard. China had been the top buyer of U.S. soybeans, purchasing over half of all exports. In May, China halted all soybean purchases, sending the agricultural economy into crisis. Farmers faced plummeting prices and rising costs, as tariffs made essential imports like fertilizer and machinery more expensive. Many family farms were pushed to the brink, threatening a way of life central to the American economy. Decades of building a stable relationship with China were undone overnight. Farmers felt betrayed, caught as pawns in a geopolitical game. The crisis revealed how deeply interconnected the global economy is. Decisions in Washington and Beijing had real, painful consequences for ordinary Americans. The future of entire communities was suddenly at risk. The trade war's human cost was impossible to ignore. China didn't panic, it pivoted. For energy, it turned to Russia and the Middle East, deepening ties and securing new supplies. Russian oil became a key alternative, strengthening the Beijing-Moscow partnership. In agriculture, China ramped up soybean imports from Brazil, investing in ports and infrastructure to ensure long-term supply. This wasn't just a quick fix. China was rewiring global trade, building new relationships and reducing reliance on the US. The government also pushed for greater self-sufficiency, investing in domestic soybean production and agricultural technology. China's strategy: diversify, invest, and insulate itself from future shocks. The result? American farmers and energy producers lost their dominant position. China's global shopping spree sent a clear message: it could thrive without US goods. The world's trade networks were being redrawn. The US was no longer at the center. This isn't the first time a trade dispute has reshaped global markets. In 1973, the US embargoed soybean exports to Japan, its biggest customer. Japan, shocked and betrayed, invested in Brazil to secure a new supply. Over decades, Brazil became the world's top soybean exporter, surpassing the US. The lesson: once trust is broken and markets are lost, they're nearly impossible to win back. Today, China is following Japan's playbook, investing in Brazil and building new supply chains. American farmers are watching history repeat itself, as short-term policy decisions have long-term consequences. The US lost the Japanese market for good. Now it risks losing China the same way. The current trade war could permanently shift global supply chains. The stakes for American producers have never been higher. This trade war isn't just a headline, it affects us all. When farmers and oil workers lose markets, jobs disappear and local economies suffer. Tariffs on imports mean higher prices for everyday goods, from electronics to clothing. Disrupted supply chains make everything less efficient, acting as a hidden tax on consumers. Globally, the standoff creates instability and forces countries to choose sides. The rules-based trading system is undermined, replaced by confrontation and uncertainty. The loss of trust in markets may be permanent, with long-term consequences for growth and prosperity. For ordinary people, this means a more uncertain economic future. The outcome of this conflict will shape the world for years to come. Understanding what's at stake is crucial. The next moves by Washington and Beijing will determine whether we find resolution, or slide deeper into a damaging economic Cold War. The world is watching. The consequences are real and they're closer to home than you think.